Last year, my neighbor's dog passed away. She'd been using Chewy for years, and she had one of those auto shipments of food still scheduled to come. She called Chewy to cancel it, and they refunded her immediately. They told her to donate any existing food that she had to the local shelter. And what they did next was, I thought, kind of neat. They sent her a bouquet of flowers directly to her doorstep with a handwritten card directly from their customer service offering condolences. Now, I thought this might be maybe a one off, and I myself experienced a little bit of Chewy's customer support this week. I had ordered treats for my dog on Chewy, and they sent the wrong ones. I called them expecting the usual runaround to ship these back, the return label, that entire charade, and probably a credit. Instead, they did the same thing. They said, keep these treats, donate them to the local shelter, and they're going to send the right ones away. And they did this in a very playful manner that made me feel like they really just enjoyed my dog themselves, almost being one of his pals. And I thought that is really indicative of the kind of company that Chewy is and the stock behind it. They seem like good people with a good business model, and I wanted to do a deeper dive, see if these are at attractive prices. On high level, Chewy was hitting key Fibonacci levels as this entire charade happened. And we're in that moment right now, a little bit below that $26 price point. So in this video, we're going to do a deeper dive into Chewy, but less from our technical standpoint, a little bit more from Chewy as a business and if we'd like to own it. Now, most people think of Chewy as just an online pet store. I know that's how I perceived it before this video. You go in, you buy either kibble, you buy toys, you buy something for your pets, and then it shows up in 2 days. But that's not really what their business is. Chewy is a subscriptions company that happens to sell to pet customers. And if you look at some of their metrics, this backs that up. 82% of their revenue comes from this AutoShip product, which is really just a recurring revenue product, their recurring delivery program. You set it, your dog food, your cat litter, whatever it is, and it just shows up on schedule at your doorstep. So they're not really acquiring customers, they're acquiring people that enter this loop. And once you're in this loop, you never really leave, and they back that up with really good customer service. On top of this, their advertising platform is also doing something interesting. One in every three ad clicks results in someone turning into their actual customer, results in Chewy receiving an actual purchase. And of those purchases, when you enter their ecosystem, nearly 45% of those customers then move on into this flywheel that I just talked about, the flywheel of entering this auto shipment program, and then they back that up again with good customer service so you never leave the ecosystem for not only your current pets but for any future pets that you may have. They also recently launched Chewy Plus, which is their version, I think, of Amazon Prime. It's a paid subscription program to then get free shipping. I imagine eventually you'll back that up with even better customer service, things of that nature. So that's what the business is. Then I started to dive a little bit deeper into the actual numbers because I thought this is where it got interesting. Revenue last quarter was 3.12 billion. That's about 8% up from year over year. And full year they're guiding to about 12.6 billion, and it feels like they're very much in line to hit that. Now, 8% growth isn't something that we really talk about as being one of those hypergrowth companies. However, we saw what just happened to those hypergrowth companies, SaaS, something that's getting disrupted easily. I think Chewy has a little bit of a moat there in terms of A, having a physical product that I imagine will be hard for AI to replace for some time, and B, customer service that also it's hard to teach that kind of just human connection with one another. The profitability story here is also something that stands out. The company used to lose money, not anymore. Their adjusted EBITDA margin hits at 5.8% last quarter, which is up nearly one full percentage point from a year ago. Management has laid out a long-term target of 10% for the EBITDA right now, which we're currently at the 5.8%. So we still have a little bit of room to grow, but that means if revenue barely grows, EBITDA could double nearly just from the margin expansion that you would have here. So I think in all regards, Chewy seems like a business that once was losing money and is, to me, on that spin, that turnaround where it started to figure things out. And more than ever in this AI era, maybe it has a bit of a moat compared to a bunch of the other tech companies that are getting hit quite badly. Now, it's not all rainbows and sunshine. There's still a reason why Chewy has been drifting downwards. And I looked into why that's been happening, or at least trying to explain why I think that's been happening. It's been nearly a 47% drawdown from the highs up here near 48 to where we're currently at trading at just about 25.48. Now, a few things happened in this entire period. One, their CTO retired early in February. That was one key event. Their CFO transitioned out last year, so two key C suite members that left, leadership turnover there. Revenue growth has also been decelerating from pandemic days when Chewy was a higher growth company. If you remember, it was one of those buzz stocks. Now, that 30 to 40% has trimmed down much, much lower, and we're starting to hit a little bit more of that stable territory with an 8% type of growth. You also had tariff uncertainty that added to more concern in terms of owing Chewy, and I believe that uncertainty still very much exists in today's climate as well. Now, with all of that, you still have to bring this to valuation because while there are risks, the stock price now is down nearly 48% from the highs. You might say, hey, it's worth taking this risk. Even the Fibonacci levels, at least, are telling you from a technical analysis perspective, it's worth taking this list. So we look at valuation metrics here, and you have, I think, a few key ratios. So you have price to sales, for example, and currently price to sales on Chewy is under one. So that seems like it's a pretty dang good deal, cheap by almost any standard. If you look at forward price to earnings, that's at about 17x. That too seems to be a little bit cheaper compared to the average retailer at nearly 21 and a half times. Free cash flow yield is about 4% and growing fast. And in all metrics, Chewy, in my eyes, seems to be an undervalued stock with a moat. And that's why I like Chewy. I think we've hit our key Fibonacci levels. We have our overbought, oversold indicators indicating to us that, hey, we're starting to enter what we should see now to be oversold territory inside of Chewy. Our price is now very attractive, especially from some of these key ratios. And Chewy has what I think is a physical product, which will be hard to replace for at least the next few months. That seems to be safe from this AI focus, which is currently very much towards software. I hope you found this video helpful. For those of you looking for some stock picks, maybe places to hide as this market volatility continues to chop. Take care, everyone. Good luck trading. I would love to hear your opinion or maybe your own personal stories about experiences with Chewy if you have some of your own. Take care, and I'll see you in the next update.